Another day, another sea of red, with fear and greed plummeting to a shocking 9. Welcome to Denver Stock Lab, where we bring in engineers' precision to tech stock analysis. Today, with Trump policy risk at level 3, we're dissecting the semiconductor space, diving deep into SMH, SOXX, and the highly volatile SOXL. Let's get to it. Alright, Denver Stock Lab, let's dive into the VanEck Semiconductor ETF, ticker SMH. Today's move of minus 1.73% brings SMH to $374.25, reflecting broader tech sector jitters. This isn't just any tech fund, it's the engine behind our digital world. With a staggering 1,276.8% YTD return, SMH has been a rocket, but recent headlines like stocks and gold retreat highlight current market caution. What's next for this semiconductor powerhouse? For the VanEck Semiconductor ETF, the AUM is not specified, but generally, larger funds tend to have better liquidity. The expense ratio is also not provided, which makes it difficult to assess its cost relative to peers. With a YTD return of 1,276.8% and a 3-year average of 44.5%, the fund is performing exceptionally well. The top holdings, including Nvidia and TSM, suggest a significant exposure to key players in the semiconductor industry, indicating a high-risk, high-reward investment strategy. The RSI reading of 38.0 indicates a neutral position, suggesting no extreme overbought or oversold conditions. The price is currently aligned with both MA20 and MA50 at $374.25. Key support is at $355.54, while resistance is at $392.96. Momentum is fading, and a break below support could confirm a trend continuation downward, while a move above resistance would suggest a reversal. The main macro force driving SMH is the U.S. trade policy, with the ongoing trade tensions with China impacting semiconductor supply chains. The recent stock market stumble as global trade faces more Trump tariff uncertainty headline is a key catalyst. The AI score of 45 implies caution, and with the RSI at 38, investors should watch the upcoming Fed rate decisions, as they may influence SMH's near-term direction, and consider adjusting their portfolios accordingly. Trade uncertainty is driving the iShares Semiconductor ETF, or SOXX, down 1.63% to $323.48, within the technology category. With a year-to-date gain of 1,695.7%, this fund has seen significant growth. As markets stumble over Trump tariff uncertainty, SOXL's move reflects the sector's sensitivity to global trade. What's next for this ETF as trade tensions escalate? Alright, let's dive into SOXL's fundamentals. While the AUM isn't readily available, fund size is crucial for liquidity, making it easier to buy and sell without impacting price. The expense ratio is also missing, so we can't definitively say if it's cheap or expensive for the tech category. However, with a staggering plus 1,695.7% YTD and a robust plus 32.7% 3-year average, this fund is clearly performing. Its top holdings, like MU and Applied Materials, indicate a strong focus on semiconductor manufacturing and memory, giving you direct exposure to the core of the tech industry's foundational components. The RSI reading of 41.4 indicates a neutral position, suggesting no extreme buying or selling. The price is aligned with both the MA20 and MA50 at $323.48. Key support is at $307.31, while resistance is at $339.65. Momentum is currently fading, and a break above resistance would confirm a trend continuation, while a drop below support would indicate a further downturn. The main macro force driving SOXX is the U.S. policy on tariffs and Fed rates, with trade tensions posing a significant risk. The recent stock market stumble as global trade faces more Trump tariff uncertainty headline is a key catalyst. The AI score of 45 out of 100 implies a neutral near-term direction. Watch for the upcoming earnings cycle and consider buying on dips, as the growing demand for 5G and AI technologies is expected to drive the sector's growth. Trade tensions and tariff uncertainty are driving the Direxion Semi-Bull 3X ETF down 4.82% to $46.61, a trading leveraged equity fund. With a year-to-date gain of nearly 4,940%, this ETF has seen significant growth. As markets stumble due to Trump tariff uncertainty, investors are closely watching this fund's next move, and will explore what's ahead for SOXL in the coming segments. The Direxion Semi-Bull 3X ETF has an unspecified AUM, which raises liquidity concerns. Its expense ratio is also unknown, making it difficult to assess its cost-effectiveness. With a staggering YTD return of 4,940.8% and a 3-year average of 43.8%, this fund is performing exceptionally well. However, its top holdings, including MU, AMAT, NVDA, and AMD, show zero allocation, suggesting the fund's actual risk exposure may be unclear. The RSI reading of 40.4 indicates a neutral position, suggesting no extreme buying or selling. The price is currently at the same level as the MA20 and MA50, showing no clear trend. Key support is at $44.28, while resistance is at $48.94. Momentum is fading, and a break below $44.28 could confirm a trend continuation downward, while a move above $48.94 could signal a reversal. The main macro force driving SOXL is U.S.-China trade policy, with tariffs posing a threat to growth. The recent stock market stumble as global trade faces more Trump tariff uncertainty headline is a key catalyst. The AI score of 42 out of 100 implies caution, and with an RSI of 40.4, the fund is technically balanced. Watch for easing trade tensions as a potential upside catalyst. Retail investors should consider a cautious approach, waiting for clearer trade policy signals before making a move. Trade uncertainty is driving the ProShares UltraPro QQQ3X, or TQQQ, down 5.94% to $38.78, a leveraged equity ETF. As markets stumble on Trump tariff uncertainty, TQQQ's price reflects its high-risk category. With a significant year-to-date decline of 592.8%, investors are watching closely. What's next for this volatile fund, and will it rebound from its current oversold state? For the ProShares UltraPro QQQ3X, we're missing key data on AUM and expense ratio, which are crucial for assessing liquidity and cost. The fund's YTD return of -592.8% is concerning, but its 3-year average return of 47% suggests some long-term potential. The top holdings, which include IQMM, NVIDIA, and Apple, indicate the fund's risk exposure is tied to tech giants, but the 0% allocation to these names raises questions about the fund's actual investment strategy. The RSI reading of 22.9 indicates oversold conditions, potentially setting up a mean reversion entry point. Price is aligned with both MA20 and MA50 at $38.78, showing no clear advantage. Key support is at $36.84, while resistance is at $40.72. Momentum is fading, but a break above $40.72 could confirm a trend continuation, while a drop below $36.84 would suggest further decline. The main macro force driving TQQQ is trade policy uncertainty, fueled by Trump's tariff threats. The AI score of 48 signals caution, implying a potential downturn. Watch the U.S.-China trade deal developments, as a resolution could boost the sector. For retail investors, consider a mean reversion entry point given the oversold RSI, but be cautious of regulatory risks and trade policy volatility. Trade tensions and rate hikes are driving the global Robotics and AI ETF, priced at $32.46, down 2.49% in the miscellaneous sector. With a year-to-date gain of nearly 798%, this ETF has shown significant growth. As markets stumble over Trump tariff uncertainty, BOTZ's short-term trend has turned bearish, but will it bounce back from this oversold condition, and what's next for this robotics and AI play? The Global Robotics and AI ETF has an undisclosed AUM, which raises concerns about liquidity. Its expense ratio is also unknown, making it difficult to assess its cost-effectiveness. With a remarkable 797.9% YTD return, this fund is outperforming, but its top holdings, including ABBN.SW and NVIDIA, suggest a significant tech exposure, potentially increasing risk, although the exact holdings and percentages are unclear. The RSI reading of 26.2 indicates oversold conditions, potentially setting up a mean reversion entry point. price is currently at $32.46, aligned with both the MA20 and MA50. Key support is at $30.84, while resistance sits at $34.08. Momentum is fading, but a break above $34.08 could confirm a trend continuation, while a drop below $30.84 would signal further downside. The main macro force driving BOTZ is trade policy, with the US-China trade tensions impacting robotics firms. The AI score of 48 signals caution, implying a potential near-term downturn. Watch for the impact of regulatory hurdles on AI adoption. As trade uncertainty looms, retail investors should consider a mean reversion entry point, taking advantage of oversold conditions, and closely monitor trade policy updates for opportunities to buy into BOTZ. Top signal was TQQQ with a hold score. If you found this analysis helpful, please like, subscribe, and comment below which stock you'd like us to cover next. Remember, this is for educational purposes only, not financial advice, so do your own research as past performance doesn't guarantee future results. Thanks for watching Denver Stock Lab, we appreciate your support.